Hi everyone, I'm Darren Mitchell, and joining me is Christina Wyatt. We're from Control and Compound, and we're gonna break down some sort of longer podcast, more on some more complicated things, into like a 5 or 6, 7, 8 minute video series. So the one we're talking about today is, can I use corporate dollars for the infinite banking concept? And we're gonna break that down. If you want to learn more, check out the podcast, visit our website, or check us out down below. So short answer is absolutely you can use corporate dollars, and this is so popular. And with the recent increases in tax rates, this is really the best strategy business owners have in Canada. If you're a business owner, you need to understand this strategy, this concept. So a lot of accountants are talking about this now. The Globe Mail had a great article on it. Very, very, very popular strategy. So let's kind of look at how it works. So if we look at a corporation earning like $400,000 a year, and then, they do some stuff with that money, and let's say at the end of it, they have another $100,000 of that corporate profit that they, need to direct somewhere. So what can they do with that $100,000? Well, number one, they could say, well, why don't we pay it out to the shareholder as a salary or a bonus? And if they did that, that $100,000 would go out to the shareholder, and you're going to pay, depending on what province, roughly 50% tax. Okay, Ontario, you'd be 53% tax in the top tax bracket. So that $100,000 turns into $47,000. All right. What if you leave that money inside the corporation? That $100,000, you're going to pay roughly 12% tax, give or take, depending upon the province. That's your small business tax on the first $500, and that is going to leave you roughly $88,000. Okay, so $88,000. But if you want to pay that out to yourself, you give yourself a dividend, you're going to be left again with that roughly $47,000 to $50,000. So if you're taking it out personally, whether through the corp or directly, you're going to be left with about $47,000 to $50,000. The better option is if you can leave that money inside the corporation. Now you have $88,000 to invest. So $88,000 is a lot more than $47,000. Right off the bat, you're 76% ahead of the game. So that's kind of step one.
That's great that we get to fund these policies with our corporate dollars. But, some would say I can do that with other investments as well, right? We can use corporate dollars to invest in GICs, real estate, other investments too. But when you use those corporate dollars to invest, there's a couple of additional layers of tax that you get hit with that we actually get to eliminate when we use the corporate insurance policies. So the first one that you're going to get hit with when investing in your corporation is tax on the growth, right? There's no such thing as a tax-free savings account inside your corp. You're going to get hit with the highest level for interest returns. Capital gains are now up to 66%. Going to get taxed on the growth. You're going to create passive income, which can also cause you an issue with your small business tax deduction. Well, with these policies, they're going to grow tax-free. So inside the policy, they're going to grow tax-free. They're not going to create any passive income. So we can eliminate that problem. The next place that you're going to get taxed when you invest in your corporation is tax on death. So if you have money inside of your corp, inside of investments, even in a cash account, your checking account, you pass away, your receiving shareholders or mostly your family members need to get that money outside of the corporation. They're going to have to take a salary or a dividend to get that money out. They're going to be taxed then. So, typically 50% either way when they take it out. Not ideal. Well, with the life insurance policy, when it pays out tax-free to the corporation, and the majority can flow tax-free out to those shareholders through the capital dividend account. That's huge. We've now eliminated tax on death as well. The next layer of tax you get hit with is personal tax. So a lot of business owners will save in their corporations for retirement, and then down the road, they need to pull that money out. They're going to get hit with that salary or dividend tax again, be left with 50 cents. Well, we can eliminate that as well. So there's a lot of strategies and lending strategies that we can use for corporate business owners that allow us to take policy loans tax-free from the policy against the policy, and we can use those funds in retirement as well. So we can eliminate 3 layers of tax by using this policy instead of using those traditional investments that we might use in our corporations for investments, retirements, and savings.
What else can you use the policy for? So I have a lot of money I put into corporate-owned policies in my holding company, but I can use that money for just about anything. I love to use it for opportunities. I love when an amazing opportunity comes along. I know I have access to cash and can take advantage of that. Or if there's a financial emergency, I can deal with that. But it's also inside your business for emergency. So I have no qualms about putting money into this because I know if I need access to it next quarter to make payroll, I can just take a loan and make sure that I make payroll, or if we have an unexpected expense coming in. So we're going to have a competitive rate of return on this product, and it's going to be an and asset, right? Every other asset you have is an or asset. Do I do this, real estate, or put it in my business, or save for retirement? You're going to do all the above with this. You're going to put it in the cash value life insurance, grow it tax-free, leverage it multiple times for opportunities, expenses, etc. And you're going to take advantage of other opportunities. We can literally multiply money and provide a death benefit and provide an incredible tax-free retirement down the road. So really, this is the ultimate savings tool, investment tool, and retirement tool for business owners. That's why it's so popular. That's why you need to learn more about it. So I hope you enjoyed this kind of quick recap of this strategy, but there's a lot of different mechanics that go on behind the scenes that you got to make sure you have it set up correctly. So if you want to learn more, check the link below, book a call with one of our wealth coaches, and he or she can go through the details with you.